What is going on, Alpha Hunters? Hopefully, you had a very fantastic week because the markets are closed for the week of December 20th. That is right. We are down to basically the last week and a half of 2024. And let's just see what went on this week because we got some things to talk about. We did have a little bit of a gap up to start the week, about a quarter point kind of gap up there. Quarter percent, I guess. Nice little run back higher, a little bit of a drop there as we were in the last hour. A little bit of a gap down there on Tuesday. Interesting. Almost an island reversal. We actually did wind up filling the gap there Wednesday, but kind of just choppy there Tuesday. Kind of just hanging out as we were waiting mostly on Fed decision. Now we kind of knew what was going to come Wednesday as we got into Wednesday. Nice little flat open, a little bit of a higher open, then it kind of just slowly pulled back until we got to the Fed announcement. We knew we were going to get a quarter point rate cut. No shocking thing there. I mean, market was 99% sure. So the thing that the market got a little, I'll say, freaked out about, as you can see, the last couple hours of trading that day were, we'll say, nice little waterfall there. Well, part of that was the dot plot. This thing, the Fed dot plot. So I'll come back to that in a second. But as you can see, nice drop there as we basically sold down roughly 3% there in the last 2 hours, which we haven't done that one in a while. SPY dropped a little bit over 3% from when we got that announcement to close of market on Wednesday. Pretty good gap up there on Thursday. I mean, we dropped 3%, Wednesday afternoon. So we haven't done that in a while. I mean, it kind of makes sense. We have some kind of bounce back. We just got it on the open and slowly pulled back there throughout the day. Nice little drop there at the close, pretty much, of Thursday to basically end the day flat. So that was an interesting look there. So the should be bounce back day Thursday wound up being basically flat to slightly negative, and that didn't set up great because then Friday we had a nice little gap down, pretty good gap, about 2/3% gap down or so. And then it was just bullshitty. People wanted to buy the dip, took the opportunity to buy the dip. We got a little extended, especially from that Wednesday sell down. So first half of the day, nice little bullish action, choppy pullback. Then the second half of the day, pulling back down, still quite a bit positive there on the day on Friday. But man, that drop on on Wednesday had to really wake some people up as to just how quickly this market can turn, because everybody's under that assumption that rates and yields and everything else is going to go back to the way it had been over the previous couple of decades, and not really factoring in what if we were in a higher interest rate environment. So along with that higher interest rate environment, this is what we got from the Fed Wednesday. This is the big deal. So the light blue dots are what the Fed members kind of were expecting last time we got this, which was back in September. And you see, the December is the darker blue dots. One of the things you'll notice is there is a much higher shift going out as far as the cluster. You can see a much lower cluster here for 25 compared to the higher cluster in December, from September to December. So there's a pretty good change there. Even out here for 26 expectations, September, December change, much higher cluster. So the average of the clusters definitely saw a much higher change there. 27, they finally started covering 27, or throwing expectations out there for 27. And you see the longer run, even a little bit higher there on the longer run. So even the Fed thinks we're still in a declining interest rate environment. Okay, fine. That might be, but it's just not going to go down as fast as what they've been saying before. And I think really the one that really spooked the market the most is this look at 25. I mean, that's a pretty good jump there for the cluster. You're around like 3.25 most part, and then you jumped up to almost like high threes, almost 4% mostly. Oof. All right. So with that talk out the way, as far as sector rotation for the week, energies were basically getting hit every day. It's like every day I looked at the heat map and what's going on with these guys. Energies just got hit every day, pretty much. Real estate underperformed pretty good. We saw pretty good upward momentum on yields, so that makes sense. Materials also underperformed pretty good amount. Communications, discretionary staples, all underperformed. Industrials also underperformed pretty good. Healthcare, financials kind of in line with the market there. Utilities and tech actually slight outperformances there for the week. And if you take a look at basically how things went from, let's say from the Fed, just before we got the Fed announcement, you can see discretionaries underperformed pretty good. Real estate, communications, materials, energies, tech in line with the market. Industrials kind of in line with the market there. Staples, financials, healthcare, and utilities at the higher end of the day. So a little bit more defensive after. You see the afternoon sell off there on Wednesday was just not as bad for some of the utilities and staples stuff. Even Thursday, they held up pretty good. All right, take a look at the VIX. Well, we had been slowly climbing to kind of start the week, and then we got that huge explosion on Wednesday with the afternoon sell-off. Huge spike and climb there. This has been a very important level around the 17, 18 or so. This has typically kind of just been more of like that support and resistance zone. Usually when you get above it, you kind of chop around above it a little bit, get below it. Well, I mean, it's kind of hard to get back above it until you get one of these suckers like we got on Wednesday. So are we going to be in a higher volatility time period? Well, I mean, technically seasonally, it's very hands-off kind of time of the year. I mean, maybe this next week we will see some volatility, but it's just not normal. Normally, we don't see that seasonally. So around this time of year, around Christmas, New Year's time. So I would say probably it's going to be a mellow week. DXY, dollar index. Yep, you see that move there on Wednesday. Nice little pop higher. We had a little flag pattern kind of forming out from kind of the end of the last week, the beginning of this week, and we got a little pop there with the moving averages rising. So we basically solidly got into last time we were in these levels, second half of 22, closed over this upper wick. If dollar doesn't come out and get crushed early this next week, I look for a little consolidation, probably continuation higher. GLD Gold Trust definitely got hit with the old drop button there as dollar yields rallied pretty strong there on Wednesday. Gold dropped off. What's really kind of interesting with gold is we did get below and close below that 100, moving average there on a daily for 2 days in a row, Wednesday, Thursday. What was really looking interesting though, if you looked at gold futures, it looked kind of bearish setting up there with that, upper wick that was coming in there on Thursday. This Wednesday candle should actually have a full body close lower. So when you looked at that, it looked like it was ready to roll over or keep rolling down. But we got a little bit of bounce. It might just be a quick retest higher. I would keep an eye on this one because you do get that break below the low that we put in basically this week. Wednesday, Thursday, you could have a possible opportunity to play this bearish. I'm not one that I want to play gold bearish just because there's been a lot of strong momentum in this thing since it broke out a little bit over a year ago. But, I mean, setup might not be bad. Yields. Yeah, we got strong moves on yields. Thursday, we got the follow through day there. And then, Wednesday, a very strong move. Friday, a little bit of a lower wick. Kind of looks like it's just kind of hang out there. A little bit of a quick retest. Looking pretty good. 10 and 2 inversion. Saw very strong movement across the yield curve on Thursday. Everything moved pretty strong Wednesday, but across the yield curve, the 2-year actually dropped pretty good. And then you saw the 10 and longer terms actually move higher pretty substantially. So we saw a nice move higher there on the yield curve inversion. Even the 10 and 1 is definitely clearly above the zero line now. So I think we're going to be done with this. I'll probably watch this, cover it one more time next week, maybe the first week of the new year, just to kind of make sure we're still moving in that direction. But I think we are going to be good to probably stop watching this as it's probably just going to continue to rise. All right, the HYG high yield corporate bonds got wrecked, man. Not much to say. They started to break down last Thursday, Friday, a little inside day there Monday, dropped off there a little bit Tuesday, and they just kind of kept rolling down. Even started Wednesday in bad shape with that big gap down there. Now, a lot of that gap down was kind of attributed to a dividend, but yeah, it was already thin ice there. The interesting thing is going to be is, we kind of came to the 200. We didn't hold below it for a week, weekly close, but we moved pretty strong here over the past week and a half. So I would imagine some consolidation and probably address this in the future. We'll see how maybe this thing sets up. But if you get a higher move, maybe up to 79 or so, that won't be the bad bad looking opportunity. LQD, yeah, this thing got hit pretty good along with the TLT. So we're just in some of these levels back from early 2024 where we had some pretty good pivot levels. So I would just be I'm good. That's about all I'll say, man. I'm good. It's I mean it's a tough one. We've had just such a strong move. If you're interested in playing this bearish, look for the retest and probably some of these lows. But I don't know if I would want to be bullish right now. I mean, you just got nothing right here as far as like support. Maybe if you got down, if it continued to drop, maybe down to like this level, that could be a possibility. Bullish play on a quick bounce back, but. As far as like the TLT kind of did that actually already. So the TLT did get down to roughly this April low, and we got the bounce back day Friday. So will that continue higher next week? I mean, if we kind of just get back down there and just kind of hang out some more, you can look for a little bit of a higher retest. But if we break that down, I would look for the retest and maybe take it back down to that late 2023 low. Yeah, we had some breakdowns of bonds. All right, something that I said I was going to kind of look at early in the week on the live stream was the annual return during the presidential election years and post-presidential election years. Because as we know, the incumbent party just lost the presidential election, at least in the U.S. And so I just pull up a spreadsheet. I keep track of basic market performance, and so that's all I kind of did here. Anyways. As far as how the market kind of performs on presidential election years, that's what this is basically telling you. Whether they incumbent won, lost, whatever. Every presidential election year, election voting year is the average return is 7.25%. Going back to the 50s, I didn't want to go back before that because mostly we were coming out of the Great Depression and World War II. There was a lot of spending and bullishness and stuff like that. So I didn't want to go back pretty much before that. Post-election years of any election year, the market performance is 7.9%. Okay, so that's kind of interesting. Now, if you looked at incumbent years, so the year where the president's party won election. So like if the Republicans were in office and they won, that's what this is looking at. So the incumbent win, okay? If they did win, the return that year, that's what this average is almost 11%, 10.96%. The year following, so this year, 1956, it would be 1957. That average is actually 11.8%. So the market does really good the years where the incumbent wins and following that year. That is obviously not the case that we just got this year. We got the incumbent lose. So let me just put that right there so you can clearly see it. So we got, I'm going to zoom in actually a little bit more over there. So we got incumbent loss, in 1960, 68, 76, all that. So these are all the years that the incumbent president's party lost and what the average return was for that year. 3.5%. That's quite a bit different from 11%. Now the year after, the market return is 6%. Now it's not like all bullish steam ahead. We just came out of a year or about to close out a year where we're going to do about 20%. Yeah, as of close on Friday, we are roughly at about 26% up on the year with, what is that, like 7 trading days left to go or so. So we don't have that many trading days left to go, and we're up pretty substantially. So are we going to sell down 6% plus over the next 7 days or so? It's very doubtful. Very doubtful this time. So when you then take that factor into account, where the year of the presidential election and the incumbent lost, there's only 2 times where we were about 20% positive for those years. And only 1 time we're actually 25% plus positive, and that was 1980. The year after, both of those years, we were negative. We were negative both of those years on average 10.6% if you average both of those together. The only other time we did that was 1976. We were 19% positive in 1976. 1977, we were down 11.5%. So we're about to be up 26% for a year in total. Will we sell down a little bit more here over the next 7 days? Yeah. Will we sell down 6% plus like we were just looking at? Probably not. We'll probably have a plus 20% return year. So that then opens up. Why is that? Well, it's a really interesting dynamic. Why is it these years you were up so substantially, and then the following year, the incumbent presidents went out, and you dropped that much? It might be one of those things where the lower voting classes might be feeling like they're not being a part of this type of well-being, I guess, if you want to say that, making money, the middle and lower classes aren't making that kind of return. They're not feeling that good. And so they vote out the incumbent, and, whoever comes in obviously then hits the wealth class, right? They hit the wealth class, and that's where you get the market drop. So that might be one reason why there was obviously a couple time periods back over here where you dropped off, or you had negative return years. Obviously 2008, the great financial crisis. Obviously people wanted a massive change. There was a lot of issues kind of going on, and I'm not saying that certain presidential years or presidents have anything to do with maybe what goes on in the economy for totality, but it was definitely people were feeling not loved, right? So you also don't have time periods where you drop that much, and so you're going to get a bounce back. So there's probably a little bit of that baked in that 2009 number there. So it is really difficult to say, especially with how bullish and how high we have been, how much the market's been aggressively strong for years. It's really difficult to say we're going to continue just to grind higher at the paces that we have been. All right, take a look at the RSPs. Very interesting look. Obviously, we had that massive breakdown there on Wednesday. I mean, last week it was just like 2 weeks in a row, just like nonstop, just hitting a little bit of sell button, and then we got that huge breakthrough. We got into these huge air pockets, and we just quickly started moving from the 50 to the 100. Now we're just kind of in between that 100 200. Not a bad bounce spot, but we also, sold down for so many days in a row. That's got to be one of the longest losing streaks. Maybe not losing streaks. I think there was one day where we gapped up pretty good. We actually ended the day positive, but it was a red day. So RSP, nice little retest here into the 100. I would expect some bullishness to probably end out this year. I wouldn't count anything crazy. I'd almost wouldn't be shocked if we went back up to all-time highs at the beginning of next year. And we'll see how things kind of go later on. The DIA, look at this move, kind of right down to that 100 moving average. Nice little bounce spot there. This thing's also been getting hit a lot from UNH, which obviously a lot of people are very aware of what's going on there. I wouldn't mind being a little dip buyer on some of these areas, but I've kind of been saying that on the RSP and the IWM here over the past week, going back about a week and a half. You're going to want to be bullish on this, and then we just got the huge drop this week. I think this just goes to show just how much people are really mispositioned on things, because if things change even a little bit more higher, I think people will really start to take notice on things. It's not like the dot plot changed like horribly. It's still going down. They just revised it up a little bit. So anyways, the Qs, nice little bounce there. Got kind of close to that 50 EMA. Been pretty strong here to start December, but this thing got hit pretty good there on Wednesday. Even Thursday actually led a little bit of that sell down that afternoon there on Thursday. And the SPY, kind of a flat day there on Thursday, but it got hit pretty hard there on Wednesday. So now you're just kind of in between a lot of these moving averages, the 50 and the 100. We just went right through the 10, 20, and the 50 moving averages, and we just kind of gained steam. So it is what it is. And I would say just take into account, how far we've moved over the past few years. And you have new party coming in saying they want to be better government spenders and stuff like that. And the market just absolutely gave you an eye opening how quickly it can drop. So yeah, it'll be an interesting year. I will not be on a live stream this next week. I will get a market outlook out next weekend, but will not be around. Family, Christmas. Hopefully you enjoy yours. And yeah, if you're traveling, safe travels. Enjoy your time with your family. And I'll get one out next weekend. Alrighty. Merry Christmas. Happy holidays. Take care.